Welcome to another 21 Hats Dashboard, brought to you by our sponsor, The Great Game of Business. I'm Loren Feldman. I'm here with Gene Marks to talk about the things we think business owners should be following this week. Welcome, Gene.
Hello, Loren. The Great Game of Business is an excellent organization, I just want to say. I was on their website last week, and I'm very happy they are sponsoring you, and I recommend people check them out.
I didn't ask him to do that, folks. He just did that on his own. Thank you, Gene. I'm sure the Great Game of Business will appreciate it too.
We're very, very happy to hear that. So there you go. We want them to continue sponsoring this. So come on.
Yes, we do.
It is legit. It is legit. So go ahead.
Gene, as usual, you've been writing and talking about stuff that matters to business owners. Unfortunately, you've been writing and talking about some stuff, taxes and regulations that aren't particularly good news. You wrote recently that some tax deductions for small businesses are going away. Want to tell us about that?
Yeah. So, everybody loves taxes. There's two big tax issues this year if you're a business owner that you need to make sure you're aware of. Number one, which is really huge, actually, is research and development expenses. Now, it used to be that the R&D expenses were only for like the pharmaceutical industry, but I've had a much larger share of my clients. I have a manufacturing client in Pennsylvania that gets, has research and development expenses, and they actually claim the R&D tax credit. That's a separate conversation, by the way. But a lot of people have R&D. If you're developing new products or new services, materials, labor, whatever. Anyway.
Do you have the sense that people who should be taking that deduction have been fully aware of it? Or
No,
do you think?
Yeah. I don't. I think, or even applying for the tax credit as well. They're not aware of it. And I talk about
So there's some people who are may only find out about it now as it's going away.
So this deduction is like, if you had R&D expenses, you're developing new products for the future, you, up until, last year, 2022, you just deduct the cost, even though it was for a future thing. Usually in the accounting world, if you're spending something for the future, it's considered to be a capital item and you would have to amortize, put it on your balance sheet and amortize it. So that went away. So what that means is, just to make sure I'm clear, if you have R&D expenses, you are no longer allowed to deduct all of them in your first year. You have to now amortize them over 5 years. So say you've got $10,000 in R&D expenses this year. It used to be you could take a $10,000 tax deduction. Boom. Now you have to amortize that over 5 years, $2,000 a year. And in the first year, you can only take 50% of it. So instead of it even being a $2,000 deduction, it's only a $1,000 deduction, which means it's only 10% of the entire R&D tax deduction that you used to get is now just gone away. And I don't know if a lot of companies know that, and a lot of accountants are concerned because this happened in 2022, and now they're, filing their taxes and they're realizing like, oh shit, we had a big deduction that we used to take and now we don't have it anymore. And now suddenly we owe taxes that we never had to owe before. Does that make sense, Loren?
It does, but for those of us who are not CPAs and not fully comfortable with financials, how big a difference does it make that you can't take it all in 1 year as opposed to having to spread it out over 5 years?
It depends on how much research and development expenses you had. If you're a business and you had $1 million in R&D expenses, well, guess what? You were expecting to deduct $1 million. You're only going to be able to deduct 10% of that this year. So you're not deducting, you have $900,000.
But you'll be able to deduct more next year
You'll be able to deduct it, in over 5 years period of time, but you're still taking a much bigger hit than you were expecting to in the first year, So that's a wake-up call for a lot of people. Now,
at the end of 5 years, you end up in the same place?
You do. At the end of 5 years, you do end up in the same place. But again, it's a shock that you have to pay in the money now. Right. You would owe the taxes. So talk to your accountant about that if you've got research and development expenses. It's a big issue. The second tax thing is depreciation. Because there's something called bonus depreciation, particularly for smaller companies. If you buy a capital asset, equipment, furniture, computer software, computer hardware, you could just deduct the entire thing 100% in 1 year. Well, starting this year, you can only deduct 80% of that. Next year, it goes down to 60% until it ultimately gets phased out. So if you are looking to buy capital items like that, do it this year and put it into service so you can at least deduct 80% of that cost right away. Otherwise, if you wait until next year, you're only going to be able to deduct 60% of that cost right away and then depreciate it over a period of time. Does that make sense?
It does. Anything we should know about what qualifies for this bonus depreciation?
It's anything with a long-term value that you're buying for your company. So it's not inventory, but it's anything else you put on your balance sheet. So again, it could be cars, could be it could be furniture and fixtures, could be machinery or equipment, or computer software, computer hardware. Those are the general classifications.
And the bottom line is it's not as good as it was, but you still want to make use of it, especially before it gets worse.
Correct. Before it continues to phase out. That is exactly right.
Your piece indicated that it's not all bad news. You referred to the Inflation Reduction Act and a few tax incentives that provides.
That is correct. So, the Inflation Reduction Act, which, is now law, does provide some pretty nice rebates and credits for both individuals and businesses that buy, electric cars, hybrid vehicles, those kinds of cars. Plus, if businesses are actually doing work in certain green areas for, in the energy efficiency industry, they can also be open to certain types of tax credits. So again, talk to your accountant because that might be something you could take advantage of.
Do you think most accountants are up on that and qualified?
No. No.
So if you're not confident that your accountant knows enough, where do you turn?
Well, here's the thing. If you've got a good accountant, as an accountant, you can't know everything, right?
Sure.
So, if a client calls me and asks me a question like that, I'm like, oh yeah, I definitely have some thoughts. Let me look into it and I'll get back to you. I'm a little busy right now, which basically means I don't know what the fuck I'm talking about, but I need some time to research this and come back to you. And a good accountant will do that. Okay. You don't have to say that they know everything right off the top of their head, but if you have a good accountant, they'll look up the rules, they'll figure out what applies to you, and they'll come back to you and they'll make their recommendations.
All right. The next piece of bad news involves regulation, and you seem to take this one pretty seriously. The sentence that leapt out to me in your piece is this one: the federal government is going to throw another punch in this fight, and it's going to land right in your face. What are you talking about?
Right in your face. Let me explain to you why. I've been talking about this, and now I finally put it all down in print, online. There's a bunch of rules and regulations that are hitting us now. Now that the Biden administration is 2 years in, they're really all ramping up. They've filled out all the different agencies, the National Labor Relations Board, the OSHA, EEOC, the Department of Labor, the FTC. So they're now in place and in the driver's seat and doing their thing. And they're definitely doing their thing. And their thing is going to impact a lot of businesses over the next couple of years in a negative way. The Department of Labor is working on changing worker classification rules. That's going to happen this year, which means people that we were classifying as independent contractors, many of them may need to be classified as employees. The Department of Labor is also looking into raising overtime wages.
That's not set in stone yet, is it?
No, it is. It is not.
It's gotten a lot of pushback, even from places where you wouldn't necessarily expect to find it, I think.
Yeah, it has. It has gotten, like, freelancers, for example. A lot of them oppose this law. They don't want to be employees. It is the final rule is expected out sometime before mid-year, so that will happen. They're also working on changing overtime rules, meaning that they want to increase the maximum level of pay, or the minimum level of pay, that you would need to pay for an employee for overtime. Right now, if you pay somebody $35,568 a year, and they're like administrative, they're not a manager, they don't supervise anybody, they're salaried and other things, you don't have to pay them any overtime if they work more than 40 hours. Well, right now, the Department of Labor is looking into increasing that number to as high as, and I am not kidding, to as high as $80,000 a year, although I don't think it'll be that high. But in that case, that means that if you've got an employee that meets those requirements, again, they're admin, they're not a manager, they're not supervising anybody, they're salaried, and again, there's some other factors, and they're making up to, it could be as much as $80,000 a year, and they work more than 40 hours a week, you owe them overtime. Okay, so that's a big issue for a lot of businesses to have to comply with that.
Let me ask you this. This is something, correct me if I'm wrong, but I think the Obama administration did this.
Correct.
And then the Trump administration rescinded it. How high did the Obama administration raise it?
48,000 and change. So I think the number is going to wind up somewhere between the 50 and 60,000 limit. And you bring up a good point also, Loren, is that the Trump administration actually, they didn't necessarily rescind it exactly. There was a bunch of lawsuits from business organizations about this change. So it clogged it up in the courts. And then when the Trump administration took over, they just didn't pursue it any longer. So it just died in the courts.
Got it.
So that could happen. It won't, because the Biden administration will pursue it to the extent that they can.
The number 35,000 does seem kind of low. Or do you think it's reasonable to raise it some?
Well, it really depends on whether or not you feel there should be any rule for overtime for people if they're salaried, and whether the government needs to be involved in that decision. I am just not a believer in the government telling employers what to pay. So if you're paying an employee 35,000 or 60,000 and they're salaried, listen, I'll give you an example. When I was a manager at KPMG, however 1,000 years ago, I was salaried. I didn't earn any overtime. I mean, I worked, and it's not like I was making big bucks, but I worked a lot of hours and didn't get paid any overtime. Why? Because I wanted to do a good job and be promoted and move further in the business or whatever. So I don't know. I just don't buy into government mandating employers to have to pay their employees, even mandated vacation and things like that. It irks me sometimes. I know it's the right wing guy inside of me. Sorry that I feel
Do you
that
believe
way.
in minimum wages?
Yeah, no, I actually don't believe in minimum wages.
Interesting.
And that's another conversation that we can have. But I do believe it should be left to the market, and I do believe that although workers should certainly have some protections, I think the minimum wage is something that I don't have a single client that pays the minimum wage. It's ignored. It's like this irrelevant number.
Well, it's become irrelevant, especially because wages went up.
That's the reason. So if it's become irrelevant, why do we still have it? It just doesn't make sense.
Well, there have been times and places where it has been relevant.
Right. In very isolated situations. I mean, I think industries, and you talk about the fast food industry and whether or not they should pay, be mandated to pay a certain minimum wage. And I don't know, if I'm working for Burger King and I'm making $12 an hour and McDonald's across the street is paying 13, I'm going to go and work at McDonald's, Well,
one thing we can all agree on, I think, is it's just crazy to have one number for the whole country. It just doesn't make any sense.
Loren, do you know who also thinks that's crazy? Rand Paul thinks that's crazy. You just agreed.
Now you've got me worried.
Paul. I know. You better stop this podcast and have a drink.
All right. Next regulation. What else is coming?
Other regulations, OSHA now has 20% more inspectors. So there's going to be a lot more inspectors. They're coming out onto our workplace, and they're increasing fines for companies. They've already increased it for inflation. And now they've increased the definition of what is considered to be a serious.
Well, that's not hiring more inspectors isn't increasing regulations. I mean, that's like the IRS hiring more people.
Tell it to my clients that are then going to have to be subject to more safety inspections. Now, I want to make sure I'm clear on this. There's benefits to employees and benefits to society through these kinds of things. So I'm not saying like that's a bad thing.
You're hinting it.
Well, my whole point in the article is it's just going to be more costly for small businesses. That's all.
Fair enough.
It's going to be more costly. Okay, you can argue separately whether or not this is good for the world or not. It's just going to cost us more money, and that's in the end what the point of my piece in the Hill was all about.
I think you also mentioned non-competes.
So non-compete agreements, I think we talked about this a few weeks ago.
We have.
Are no longer allowed according to it's the FTC, I think, was the ones that was involved in that, not the NLRB.
But there's litigation here too, I think, right?
There is, and they're actually coming out. They're going to come out with a rule, the FTC, based on litigation, disallowing non-competes, which basically means that if somebody leaves your company and goes to a competitor down the street, they're allowed to do that, and obviously bring with them whatever proprietary information you have. There are some states, California and New York, that have never allowed, for years, have not allowed non-competes. So it's not as if this is like a new thing. But for a lot of businesses around the country, I mean, they can no longer protect themselves and their customers and their lists and their data and their knowledge with a non-compete anymore. That's going to go away too, and I think that's going to hurt some businesses.
All right, let's move on. The Biden administration just released a budget. Is that part of the bad news or part of the good news?
It's part of the no news. It is. It's really funny. Like I wasn't even like following the story because it's like, this is stupid and irrelevant. I mean, whatever, your President Biden is recommending for his budget, it'll never pass a Republican House and a divided Senate. And everybody on earth knows that. It's just, he's setting his playbook for his reelection campaign, and that's fair. Good enough for him. But now you know what he is, what he's proposing. And my only thing that I mean, I am a fan of some of his spending initiatives. I get that. I am super concerned about the deficit. I am not convinced that, his measures are really going to significantly address our national debt. I mean, even the Congressional Budget Office still says it's going to grow by $19 trillion over the next 10 years, despite his budget. My biggest pet peeve with his going after the wealthy for more taxes, so many small businesses rely on corporations who he wants to tax more and wealthy individuals. We provide landscaping services to marketing services at corporations, and we sell pizza and dresses and do car repairs for wealthy individuals. And we go in and we fix stuff in their home. I don't, because I can't screw in a light bulb, but contractors go and they make money, working with the less money that people have to spend because they're being taxed, out of it.
I think they'll probably still be able to afford somebody to come in and put in their light bulbs.
Maybe, maybe not. But then the other factor is he is going after now our beloved pass-through deduction for small businesses, which was part of the 2017 Tax Act, which was this big 20% deduction that we got for, if you're a pass-through on your income. And he wants to limit that based on the income of the business owner. And I can assure you,
do we know the specifics of that? How
the last one I looked at was $400,000 household income. Okay, that was the last number that I saw. And $400,000 is not exactly wealthy. I don't care. Go ahead and tell me if you disagree or not.
I don't want to get into that debate.
For a business owner to have earned $400,000 in their business in a year, trust me when I tell you, Lauren, that they're not looking at $400,000 in cash sitting in their bank. It is more likely than not that they've taken most of that money and reinvested in their business, hired employees, bought equipment, did whatever. So, they're being taxed on money that has already been spent and respent. And I think doing that is going to limit the amount of money they can spend and respend. So
I'm not quibbling with that. I'm just, if you're looking at the curve across society, I think it's toward the high end is all I would say.
Yeah, I mean, it is. I do bristle as well when we have the whole tax the wealthy thing. The other thing that concerns me also is taxing unrealized gains is a real Pandora's box to open. But I don't think that'll ever. I don't think it's constitutional, so I don't think that'll ever happen.
So is that really it from the budget that affects small businesses?
Those are my thoughts for now.
Not that it's going anywhere anyway.
Right.
Last thing, Gene, I think you knew I was going to throw this at you. I can't even do this with a straight face. We've had the Great Resignation, we had quiet quitting, and now the latest buzz phrase to go viral is bare minimum Mondays, which started with somebody on TikTok saying that that's how they kind of get through the weekend by telling themselves that they can just survive Mondays by doing the absolute bare minimum at work.
Yeah.
I'm wondering how you feel about this, Gene.
Well, I say for all of you people that support bare minimum Mondays, I support a bare tookus Tuesday.
I'm not sure all of our listeners know what a tookus is, Gene.
I will hold a Zoom call with all you bare minimum Monday people, and I'll be happy to show you my bare tookus.
Okay, now we're getting a feel for
it. That's exactly how I feel about bare minimum Mondays. It's insane, and I only put it to you this way, Lauren. Say you're getting heart surgery on a Monday, and your surgeon. practices bare minimum. Or say you're on a flight on a Monday and the pilot is like, it's bare minimum Monday. I'm just going to really, wing this.
I'm hoping my pilot is not on TikTok. That's what I'm hoping.
It is just anybody that is actually pushing bare minimum Mondays. They're just shit employees and should not be hired. I would never hire. If I was looking to interview somebody and I saw them on TikTok talking about bare minimum Mondays, I would cross them right off the list. I mean, who wants to hire somebody?
That's
like
an interesting. Do you check people's social media feeds when you?
I actually have not recently, and I just hired somebody recently. I never checked their social media feeds. So maybe it's not something I would, but I'd be able to figure it out, I think, even before looking at their social media. There's a certain type of person out there that would be a bare minimum Monday supporter. And hopefully I can sniff that person out before it gets too serious.
What are you working on, Gene? Anything you can tell us about?
So piece for the Philly Inquirer next week on the New Jersey has got a really interesting program that I hope goes national. They are funding, they're helping small businesses in New Jersey, get found online and upgrade their website. They're giving them digital marketing support. And they put together like a few $1 million and about a handful of marketing agencies in New Jersey. And it's like kind of like workforce development, you get it trained and then the state will reimburse you, to give these employees skills. Now the state will reimburse these marketing agencies to help their small businesses. And I think that's a cool idea. And
interesting.
Yeah, I'd like to see that grow, around the country. So that's, that's my big thing right now. And I'm still up in the air as what I'm going to write for The Guardian, but I'll let you know.
Well, we'll look forward to that. Gene Marks is a CPA who writes weekly on small business for The Guardian, The Hill, The Philadelphia Inquirer, The Washington Times, The Chicago Daily Herald, Forbes, and Entrepreneur. You can also hear him on ABC Radio's Eye on the World with John Batchelor. Gene hosts 2 small business podcasts of his own with Paychex Corporation and The Hartford. This episode was brought to you by The Great Game of Business, which helps businesses with open book management and employee ownership. You can find them at greatgame.com. Gene, it's Monday, and you have certainly put in far more than the bare minimum.
Good point. I should have made that joke. Thanks, Lauren.
Enjoy your Bear Took Us Tuesday as well.
I know that my audience will. That'll never happen. Don't worry.
See you.
Take care.